I know many of you out there are business owners or know people that are, and you work through what we call the financial cycle and talk about balance sheets and profits and loss statements and all that sort of stuff that entrepreneurs have. But don't tune out if you're not a business owner, because I want to take something, a very simple concept that's very familiar to some people, and relate that to some of the stuff that we're seeing out there now in the markets. So this financial cycle, I want to talk about two of kind of these measuring sticks, if you will, that they have out there. First, basically a profit and loss statement. So what do you have? Basically, you have your sales of whatever you have, sales minus cost of goods sold, minus your expenses is going to equal your profit, right? So then on a balance sheet side, you're going to have your assets is equal to your liabilities and your stakeholder owner's equity, right? So when you kind of visualize those two together, a good, healthy company, has good sales, they have reasonable expenses, and they're generating a profit. That profit can go one of three ways, right? It can go back up to buy more assets, inventory, stuff like that, right? New buildings, people, all of that sort of stuff. It can go pay debts, or can go into the owners or shareholders' pockets, right? So you can easily do that. So a good, healthy company is probably doing all three. So if that cycle gets broken, or if there's challenges in that, you can see how easily that can break down and profits can drop, or you're unable to pay debts, or maybe you're not paying a dividend, or the owners aren't getting paid anymore. So let's look at this kind of in today's world. Supply chain shortages. Those are assets. Inventory would fall into that, right? So, and also when we have kind of our flow of our profit and loss, if we don't have as much stuff to sell, potentially we're not able to generate as much profit, which then we're not able to buy more assets, or we're not able to pay down our debt, or we're not able to give as much back to the owners or shareholders. Interest rates rise, as we've maybe experienced recently. These interest rates rise to this. What does that mean? Your debt becomes more expensive. So even if you're selling as much stuff or you're generating as much profit, if that cost of that financing gets more expensive, maybe you're not able to generate as much to do the other two things. Buy more assets, or pay your owners their shares, or put money in the shareholders' pockets. So you can see this financial cycle is vitally important to businesses and corporations across the world. So a good, healthy business is able to keep this cycle going. And when you have these little interruptions along the way, supply chain issues, labor challenges, interest rate changes, you can see how it potentially can affect that over the long term. If you'd like to talk about maybe your business or some future plans, give us a call. We'd love to sit down and talk with that here and help, so you can help build your retirement plan, whether you're a business owner or not, here in the Northern Michigan area.